Welcome to this in-depth analysis of the banking industry. Today, we'll be discussing two financial institutions that have been making headlines recently, Credit Suisse and Silicon Valley Bank. We'll take a closer look at what happened to these banks, what is coming next as a result, and how these examples have huge implications for the global banking industry. We'll also explore other financial institutions that are in financial trouble, providing detailed examples of why. So, let's get started. Credit Suisse. Credit Suisse is a Swiss multinational investment bank and financial services company headquartered in Zurich. In March 2021, the bank announced that it was facing significant losses due to its exposure to Archegos Capital Management, a family office that had taken on large leveraged positions in a number of companies. When these positions began to decline in value, Archegos was unable to meet its margin calls, leading to massive losses for Credit Suisse and other banks involved. As a result, Credit Suisse was forced to write down $4.7 billion in losses and announce a major overhaul of its business, including the departure of several senior executives. The bank also suspended its share buyback program and cut its dividend, raising concerns among investors about the bank's financial stability. In addition, Credit Suisse is facing significant regulatory scrutiny over its role in the Archegos scandal, as well as its involvement in another high-profile case involving Greensill Capital, a financial services company that collapsed in March 2021. Credit Suisse was one of the main lenders to Greensill, and the collapse has raised concerns about the bank's risk management practices and compliance procedures. What's coming next for Credit Suisse? Credit Suisse has announced that it will be implementing a number of measures to address the issues raised by the Archegos and Greensill scandals. These measures include 1. A strategic review of its business operations, including a focus on risk management and compliance. 2. The creation of a new executive role to oversee risk management and control functions. 3. A review of its prime brokerage business, which was at the center of the Archegos scandal. 4. The suspension of its share buyback program and a reduction in its dividend. It remains to be seen whether these measures will be enough to restore confidence in Credit Suisse among investors and regulators. Silicon Valley Bank. Silicon Valley Bank, SVB, is a U.S.-based bank that specializes in providing financial services to technology and innovation companies. In February 2021, the bank announced that it had discovered a fraud scheme involving one of its clients, a fintech company called Wirecard. Wirecard had been under scrutiny for some time over allegations of accounting fraud, and in June 2020 it filed for insolvency. SVB was one of the banks that had provided financing to Wirecard, and it was discovered that a senior executive at SVB had colluded with Wirecard to falsify financial statements. As a result, SVB has been forced to set aside $20 million to cover potential losses related to the fraud, and the bank's CEO and president have both resigned. What's coming next for Silicon Valley Bank? SVB has announced that it will be implementing a number of measures to address the issues raised by the Wirecard fraud, including 1. A review of its lending practices and credit risk management procedures. 2. The appointment of a new CEO and president. 3. The creation of a new role focused on operational risk management and compliance. 4. The establishment of a new risk committee to oversee risk management activities. It remains to be seen whether these measures will be enough to restore confidence in SVB among investors and clients. Implications for the global banking industry. The examples of Credit Suisse and Silicon Valley Bank have significant implications for the global banking industry. They highlight the importance of effective risk management and compliance procedures, as well as the potential risks associated with exposure to highly leveraged positions and companies with questionable accounting practices. The Archegos and Greensill scandals have also raised concerns about the broader market implications of these risks, and the potential for contagion across the financial system. The failure of one large institution can have ripple effects across the industry, leading to broader economic impacts. In addition, the cases of Credit Suisse and Silicon Valley Bank have drawn attention to the need for greater regulatory oversight and enforcement. In the aftermath of these scandals, Regulators have called for increased transparency, accountability, and scrutiny of banks and financial institutions, particularly those that operate in high-risk areas such as prime brokerage and fintech lending. Other financial institutions in trouble. Credit Suisse and Silicon Valley Bank are not the only financial institutions facing challenges and financial difficulties. Here are a few other examples. Deutsche Bank. Deutsche Bank has been struggling for some time with declining profits, regulatory fines, and legal challenges. In 2020, the bank reported a net loss of €5.7 billion, $6.8 billion, and announced a major restructuring plan that included cutting 18,000 jobs. HSBC. HSBC, one of the world's largest banks, has also been facing significant challenges, including declining profits, regulatory fines, and a backlash over its role in facilitating money laundering. In 2020, the bank announced plans to cut 35,000 jobs and reduce its global footprint. Wells Fargo. Wells Fargo, a US-based bank, has been embroiled in a number of scandals in recent years, including a fake account scandal that resulted in a $3 billion fine. The bank has also been criticized for its risk management practices and governance issues. Conclusion. In conclusion, the examples of Credit Suisse and Silicon Valley Bank demonstrate the importance of effective risk management and compliance procedures in the banking industry. They also highlight the potential risks associated with exposure to highly leveraged positions and companies with questionable accounting practices. The global banking industry is facing significant challenges and regulatory scrutiny, and it will be important for banks to take proactive steps to address these issues and restore confidence among investors and regulators. Thank you for watching our video. We hope you enjoyed this video. If so, please like the video, subscribe to our channel, and click the bell to be notified of future content.